Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Aquiles Larrea is with us, founder, CEO at Larrea Wealth Management. Glad to see you both on this Friday. So, Aquiles, first up on your list is Microsoft, and it's been a very choppy trade this morning. Throughout this week, we've seen the EU exploring the antitrust probe into Microsoft, its OpenAI partnership, its bundling of Teams, for example. And this could really cost them 10% of global worldwide revenue. And so, but today we've heard more about the pairing of the OpenAI partnership. And so with that, this choppy trade. Tell me your thoughts on Microsoft today.
Yeah, the thing you have to put aside, lawsuits aside, you can't control that. Right now, the company is in a leadership position, I believe. As far as the trade is concerned, there's an opportunity here, Nicole, to get in and out of this stock multiple times. In other words, you could be making anywhere between 3 to 10 points on this stock for a very short period of time, less than a month, and you could make multiple moves to the upside. You have to remember that in spite of everything, they are still one of the dominators in the AI sector, more than a lot of companies out there. They're going to continue to maintain that leadership, barring any major fault or like you mentioned, the Justice Department. But at the same time, we fully believe that they're doing the right thing and that the stock will continue to move towards the upside, and that we'll continue to see a movement as far as 10 to 12 points on it in an 18-month time period. We also believe that there's a chance for you not only to go in multiple times in that 18-month period, but to make significant money. You know, the whole sector is getting beat up right now. Can you imagine? Beat up in definition is 30% instead of 15%. We're thinking 15%, you know, at the high end. But can you imagine a sector that was just making their, 30% or higher, going and paring back? I'll take that all year long. Yeah. Makes a lot of sense.
Look, if you put $1,000 into Microsoft 5 years ago, it would be $3,300 today. There's certainly been choppy action over the last 5 years, but in the long run, a winner. And so when you're saying it moves up 8 to 10% in 18 months, it's not too far off its highs. And let's get to Ben Lichtenstein, who's taking a look here at the charts. Ben, some of your thoughts on the chart.
Yeah, good morning, guys. Nicole, short-term, mid-term, and long-term winner here. Bullish pattern across multiple time frames here, supportive of the fundamentals that Aquiles just laid out there. Let's break it down. I wanted to start with just the price activity we've seen off the lows from the end of last week. Stock was trading, if you remember, down around that 443, 44, 444 level, and you can see a very well-defined trajectory to the upside this week, all the way up to 456. And again, just easily identifiable, bottom left, top right. But I wanted to show you a similar fashion in terms of what's going on here as we take a look and step away from that 5-minute candle chart into the 30. Again, bottom left, top right. So from the week that was to the month of June, and the rally that we've seen, a 60-minute candle chart shows a high conviction trade here, where we see 4 really well-defined areas of consolidation where the markets pause and then kind of continue along that trajectory to the upside. Actually, looks like we're starting to balance out a bit here right now. So I think you could just go ahead and around this 450, 455 area, start to look for something a little bit more consolidative rather than the high conviction move up that we saw in to the beginning of the week, middle of the week here, and that rally again up to that 456 level. We've kind of tapered off a little bit since, but that's a win for the bulls in many ways, right? Holding this upper level, acceptance, and when you take a step back and look at this longer term trend up, I mean, talk about a win for the bulls here. Microsoft in a well-defined trend up off the lows from last fall, down around 310 this week to above 456 again, briefly. We're seeking value higher in a vertical phase, so that means that basically we're seeing high conviction as we break out of this range that was established around 410. Take a step back. Look at this. 330. I love when this happens. 370. 410. So it just kind of feeds into the idea that, again, as we were just talking about, maybe something around that 450, 455. It looks like about every $40 Microsoft has found comfort and kind of gone a bit sideways, sort of consolidated. But this is a very well-defined, again, trend higher right now. And it doesn't look like we're rejecting this upper level as of yet. In fact, it looks like we're seeking value higher here, Nicole.
Yeah, it certainly looks like a good chart there overall with a lot of up arrows and the trend that's upward. Let's get to another name here, and that is Roku. Actually, Wedbush noting that it's on the path to profitability and reiterating it's outperformed. They have a $75 target on that. I think Kathy Wood had been stepping in and actually buying some of it as well. Some of your thoughts on this name, which actually has really been hovering around lows.
Yeah, this stock has been beaten up, no doubt. The whole sector has been beaten up, no doubt. There's been increased competition with Apple, with the other providers, Disney and the like. But the thing you have to remember about Roku, they're not really in direct competition with those particular companies. They're their own entity looking for strategic acquisitions. They are a leader still in the content acquisition space. There's also, like you mentioned, the stock has been beaten up at this point, so hence the opportunity. We think that this could easily go up in a more than 10% in a 12-month time frame. Now, I say this looking back at the history, how much this stock has gone up, the entire sector as being beaten up, we could see this be a contrarian in the sector and start to move towards the upside in a very short time period. And we also think, as far as revenues, as far as consolidation in the industry, it's going to be a winner. It's just going to take some time. You're going to have to be patient. So you're going to have to sit on this one. It's not going to be an in and out trade, Nicole.
Look, ARK did acquire 7.3 million worth of shares of this company in the last few days. Some of your thoughts here, Ben, on the chart.
Well, this is a stock, when you look at the longer-term charts, somewhat dismal, trying to recover here a bit. So let's start again in a very similar fashion as we did with our last example with Microsoft and kind of begin with a more granular look at price activity and then sort of work our way up and see where we are and where some of this rally that we're looking at here puts us on the bigger picture. I just wanted to start off with a 5-minute candle chart and the move up that we've seen this week. It is very bullish, to say the least. Roku has been and continues to be exhibiting some conviction higher. And actually, when I got this name earlier, Aquiles, we were in a vertical phase breaking out of this range around 57, so seeking value higher. And I think what we can do is just take a look. Let's update this chart, because I think that we're in the process of establishing this new area of value higher, right at 60. So again, exactly what the bulls have been looking for this week. They started to balance out around 57. Thursday, today, again, high conviction move up, and it looks like we're just continuing the staircase type pattern. So bottom left, top right, I mean, there's a few different ways of describing it, but it does look like the longs are being rewarded here. Now, this move that we're looking at actually started off, if you can remember, about a week or so ago, Friday. 51 is where we bottomed out here. The rally up that we're seeing, again, just sort of adding momentum to that into this week. And you can see a well-defined kind of V-bottom type pattern here, or at the very least trying to establish a bit of a bottom here, but kind of a mess, right? This doesn't really communicate trend one way or the other. Tough to say we're top left, bottom right, or bottom left, top right in this instance. It's just, again, difficult. So when in doubt, zoom out, I always say, and that's when things become clear, but not necessarily better, right? I guess the best way of putting it. We do have a pretty well-defined double top up on the left side of your screen. Over here, let me just kind of squeeze in so we can establish. And then off that, we've been trending lower, up around 490 is when we established that level. In balance, around 80, going all the way back to the summer of 2022. So we're near the lower extreme of that range, but in a low conviction trade. There's a good possibility here, Nicole, that we have some room to run, so to say, because, again, still, kind of within this range here, there could be some upside momentum. But until we take out 130, I mean, we're still in a trend lower here on this longer-term chart.
I mean, that chart is, it's just brutal.
Yes.
You know, there was a time that it was so exciting. You know, Roku was it, right?
Yeah.
That double top really telling. Thank you for that, Ben. And do you have a quick final thought? I want to get to Raytheon.
Yeah, I think you have to think of Roku as they're a dominator in their sector, but at the same time, you have to think of them, they're a growth stock. There's a lot of opportunity to make money here. But as Ben said, we're going to see a lot of near-term volatility. It is a turnaround target for us, and we hope that that's going to turn around in the next 12 months.
Yeah. Wells Fargo today put a 139 from 141 target on Raytheon, so they did lower it a few bucks. They still maintain their overweight rating on this name, but it has been a winner year to date, up nearly 20%. Where do you think it's headed? It's off its highs, recent highs.
Yeah, still think that Raytheon is one of those stocks. Right now it's in a tough consolidation move. Simply, you'll see Boeing, it's death by association with all these other stocks. The entire sector is under pressure right now. But even though they're going up, we feel there's a lot more room for them to run, that they could make another 10 points within that 18-month time period. But you're going to have to be patient. You're going to have to sit on it a little while. If you see any quick moves to the downside, to accumulate and be smart and strategic in that sense, because this isn't going to be an overnight story for you.
Yeah, understood. Okay, so you got to have a little patience on this too. And, the administration could have a gearing on this one way or another, depending on, I don't know, right? Biden, Trump, we'll see how that fits in to aerospace and defense as well. Ben, take a look at the charts, please.
Yeah, a little short-term weakness has that bigger picture a little bit cloudy right now, but I'm going to side with Aquiles on this one and give the benefit of the doubt to the bulls. I'll show you why in just a second. Let's start off first and foremost with the two phases of price development. This is a prime example right here. As I look at RTX, you've got sideways consolidation up around 107, high conviction trade lower. Look at this, red candles galore, and then again, balance which form. This is exactly what we always talk about, right? The two phases, the transition from one into the next, and you can see after selling off, again, we're looking at some of the price activity we saw in the beginning of this week. We've been balancing. No rejection of this lower level right now, accepting price around 101. Take a step back with me. As you can see, again, a bit of a bearish pattern playing out, not only here and recent, but also as you take a look, we're going all the way back to the highs that we saw up around 108. If you remember, that was back at the end of May, beginning of June, and three really well-defined areas of consolidation that continue to form at lower and lower levels. So again, a bit of a bumpy road here, short and intermediate time, and that's why as you take a look at this longer term time frame, you can see the bulls are not happy to see what's playing out here, because that breach of 102 is definitely raising some concerns. If you sort of look at these two areas of balance as separate areas, which I do, 102, 106, but I think the real bearish narrative here is if we start to kind of continue lower, right? Because taking out 102 is significant, but we really haven't opened up the door to the downside here. We're just hanging out at that level right around 100, 150. So I thought about, again, well, what happens if we just sort of establish this as one larger area balance, and then if you take a step back and kind of look at it through that lens, 100 being the lower extreme here, you can kind of see how we're testing that right now. But yeah, we could be still in this well-defined trend up off that fall low from last year, around $70 to above 108 this month. If you remember, bulls want to see it back above 104 though in this scenario, in this instance. Now, if they do get that best case scenario, hopefully open up a door for a retest of that 108, 110 level. So a couple different ways of looking at this short-term weakness, but again, I think this is the rosiest kind of picture type scenario playing out here, and that is that this 100 level holds here right now and that the bulls remain in charge. Nicole.
Yeah, and we got to get back to that 104
yes,
to really have a little more telling, and above, to get a more telling picture. Aquiles, just a final quick thought, because, in my reading, I've seen that there's going to be, I think it was maybe Piper that talked about a 10% pullback. There was another analyst talking even about a 30% pullback. How bullish are you? Are you absolutely bullish over the next, 6 months, few years? Or do you feel this nervousness?
Well, there's always nervousness, but we are super bullish. Sometimes we glow in the dark how bullish we are. But to be more realistic, the numbers as far as the market is concerned, look at the Fed inflation number that just came out, in line with expectation, actually realistic numbers. We're seeing that the market as a whole is moving into the direction that we thought it would be, and that markers are showing us now that it's a slow, steady pace towards the upside. We will have regression to the mean, but at the same time, we should see a slow and steady move on that upside and movement in the positive directions. Hold on for the bumpy ride.
All right, glow in the dark bullish. I like that. Aquiles Larrea of Larrea Wealth Management, thank you for being here today for the Big Three. And of course, thank you to Ben Lichtenstein on our charts every day for Big Three.